I don't know if you want to talk about these magazine covers. Can I delete the...
I'm DJing. Don't worry. I'll skip them if we have to. It's all good.
Emerging currencies? We don't need them. Deleting that.
Leave the emerging currencies.
Oh my God. This short S&P chart, I hate this too.
Why do you hate it?
Invert the S&P.
Hey guys, JC Peretz here, founder of AllStarCharts.com, and I am joined once again here by Steve Straza. Welcome to Pardon the Price Action. How are you, Steve?
Good, man. How are you?
Rock and roll. Let's go. Netflix and Tesla are kicking off big tech earnings today and tomorrow. Both have been strong performers off their cycle lows. Are you buying these stocks here at Netflix and Tesla?
So, I mean, this has been the group to be in, right? Mega cap growth, whether it's Netflix or Tesla or Meta or Nvidia, those have been the winners this year, right? This performance chart really shows that. For me, I'm far more interested in Netflix. When we talk about growth stocks, I find myself saying the same thing over and over and over again, which is buy the ones that have completed basis. If you go back to Netflix, this is from two earnings reports ago now, right? And we call this a volume pocket or a memory gap. All it means prices gapped through there early 2022. There's no price memory there. These gaps tend to be filled very quickly. Second observation about Netflix that I thought was really cool is price has been gapping all around this range, this memory gap between 250 and 330 on the last 3 out of 4 earnings reports. Do buyers step in here and does this form of resistance turn into support? I think so. When I look at this, I see a completed reversal pattern. I think prices will hold here, and I think you could trade it from 330 back to 450.
Steve, this chart, year-to-date returns, who cares about year-to-date returns?
It's for information.
Listen, the worst performing sectors of the last couple of years have been technology, have been growth, have been communications. All the stocks that we're looking at here, what have been the best performing areas year to date? It's been all of them. Sector rotation is the lifeblood of a bull market. What you're seeing out of growth, what you're seeing out of tech is not evidence of bear markets. These are things you see in strong uptrends. Next topic.
I like it. Playing defense. So aerospace and defense stocks keep popping up on our new highs lists. What do you think about these industrial leaders right now?
Well, I'll tell you this much. There's nothing defensive about aerospace and defense stocks. These are industrials. They tend to be, would you call these cyclicals, Straza? Are these cyclical stocks?
Yeah, I would.
Yeah. Okay. So even Straza calls them cyclical, and he drives a hard bargain with that at times. And, the bottom line is these are not like consumer staples. They're not utilities. They're not, defensive. They just defense stocks but they're industrials at the end of the day. Look at Raytheon breaking out, making new highs. Look at Lockheed Martin breaking out, making new highs. Look at AAR. Look at Curtiss-Wright. I mean, these are beautiful bases. And when you look at the aerospace and defense ETF, the index itself, you could throw Northrop Grumman in here. What's the GD, right? What's
Dynamics, yep.
General Dynamics, right? These are strong names.
So you mentioned beautiful bases. I don't know if they're defensive or not defensive. Probably definitely not defensive, actually, but they're leaders. I know they're leaders, right? If you look at this relative trend, this is like the bases that we want to be buying in growth stocks, but on a relative basis. It's ITA, XLI. Throw the chart up. Snoozing on the job here. So look at this base. It's beautiful. This tells me now that the relative trend is in favor of aerospace and defense stocks. This group probably continues to outperform. And I particularly like Lockheed Martin. They just beat earnings. They actually just knocked it out of the park, beat on top, beat on bottom, affirmed guidance, said bullish things about space and Mars and things, all good things. So Lockheed Martin, new all-time highs.
You caught me sleeping. I was already excited about the next topic. Ethereum, Straza, making new highs, confirming the recent price action that we were already seeing in Bitcoin. Is the new crypto bull market upon us? So
I think so. We talked about this last week. We talked about Bitcoin last week, broke out of a really nice reversal pattern, a really nice base. But I'll let you talk about that. Let's rewind to where this whole thing started, right? This all began last fall on the FTX blow up. I remember sitting here talking to you and saying, boy, like how poetic would it be if this was the bottom for Bitcoin and Ethereum right now? Looking back, was very much the bottom. We have these nice reversal patterns. And one thing I really want to see to confirm, the new highs in Bitcoin and now Ethereum is altcoins. I want to see that risk appetite, right? I want to see the altcoins really start to participate. If you look at the altcoin index, that's our custom altcoin index, another nice reversal pattern is shaping up. I think that resolves higher. We start to get Solana, Matic, Doge involved. Hey, it's a new alt season is upon us.
I remember there were days like I'm like texting you on Saturday mornings and Sunday mornings because these things were really moving. You were getting 20% moves in some of these altcoins on like Saturday and Sunday mornings, and you and I were all over that. There's a time and a place for everything, and just hearing these names again, really, really interesting. I mean, for me, that former resistance, the former cycle peaks, for Bitcoin and Ethereum, I've said it a million times, if we're above those levels, you got to be long, because I think we all have exposure. We're not investors in cryptocurrencies that are in uptrends. I think you're short by definition. Like even like just like in life, I think there's too much risk of not being involved if we're above the prior cycle's highs. Like that's really how I look at it. Well, we obviously, I'm definitely involved, and I'm looking to put on some pretty serious positions if we are above, holding above 30, 31. If we're above those levels, I think you can be very aggressive to the long side.
I think the way that price reacted at this 30,000 level recently is just super impressive too. Really resilient. So that's
watching it closely. Yep.
All right, let's do this. The dollar is at a critical level. Some would even call it an inflection point. Does it hold, and what are the implications?
I mean, listen, I don't know if anybody has said it more than I have over the last few years, but the negative correlation that we've seen between stocks and the US dollar is off the charts, right? When the dollar's under pressure, stocks are doing great. Like, look at the dollar just got slammed over the last couple of months. How did stocks do over the last couple of months, right? European stocks are up over 30%. Dow's up 16%. S&P, NASDAQ, each up 15, 16%. Big returns since the dollar peaked, right? Since the dollar kept tumbling down. And by the way, just how the journalists do a great job of top ticking the markets at key turning points, right at the peak in the dollar, cover of Barron's, G-dubs flexing with a tank top, jumping out of a dollar bill. Can't stop, won't stop in the US dollar out of Bloomberg Business Week. Dollars come tumbling down since then. So if you are in the bearish camp for equities, I think it starts with a stronger dollar. If the dollar gets a bid at these levels, which it has before, there's your stocks under pressure. If this breaks, I think you're getting a face ripper in equities.
Well, I think you just said it, right? That's the level. So next chart, 102, 103, right? So is the rest of 2023 going to be more like the first quarters of 2022, the first 3 quarters of 2022, or the of 2022? What happened between the third and fourth quarter? Dollar peaked in late September, and then risk assets caught a significant bid into year end, right? So I think this 102, 103 level, if you zoom out and show the long-term chart of the dollar, that breaks and we're back in the box. Bullish risk assets, I think you see a lot more of the price action we saw towards the end of last year rather than the beginning of last year.
One more thing, the emerging markets, the correlation between emerging markets and the US dollar off the charts, right? So you'd think emerging markets would be the leadership group outside the United States in that weaker dollar environment. It actually has not been. It's actually EFA, which is a ton of Europe and a ton of Japan in there. It's developed markets outperforming EM with that weaker dollar. Very impressive. Some of these European equities. All right. Straz, the next topic, tech and healthcare have both been hot this year. Healthcare more recently. What is wrong with the biotech stuff?
You would think they'd be working, right? Growthy stuff's been working, tech stuff's been working. Now, more recently, we're seeing large cap healthcare, the big pharma companies really, really working. Why aren't the bios working? Some are, but at an index level, it doesn't look great. I really want this little base here in IBB to resolve higher. It's really like that 133, 134 zone there. We have prior cycle highs all the way from 2015. Define your risk and get long. I think it's a great way to trade the space too. A breakout here above this like 133-ish, 134-ish level in IBB gives you a nice diversity of exposure in a space that I think is very difficult to pick individual names in. If I had to, though, you know how I love my genomic stocks. You're not going to find a better base than TXG out there. And I love this company too, JC. This is the one that we were talking to about doing the DNA sequencing years ago.
Are we going to do that? Why haven't we done that?
I don't know. Got to talk to 10X Genomics. What's the deal, Giancarlo?
Yeah. Let's get this done. We should totally do that. Haha, nice. All right, listen, for healthcare, for me, it's again getting back to sector rotation. Fun fact: healthcare is the second largest component of the S&P 500, and we're seeing a ton of strength there. It's actually 20% of the Dow Jones Industrial Average, believe it or not. Again, second largest component, tied for first there with financials. So what is wrong with biotech? For me, this is one of those things where there are winners and losers. In these biotechnology companies, they're huge losers and there's huge winners, right? Like they're very dramatic. So I think, in biotech specifically, you could be more individual equities focused. Look at this Apellis Pharmaceuticals. I mean, just a huge base, $70 will get you done. If you're below 70, leave it alone. Above 70, this is a ridiculous base. That's what it looks like to me.
It's a really bifurcated space, so you got to either lean on the leaders or just buy the index, right? Something like this.
All right, let's do the words.
Words. Hold on, let me get myself situated here. So this is a game that we like to play called Word Association. Let me start again. So this is a game that we like to play called Word Association. I'm going to say a word or a phrase. You're going to tell me the first thing that comes to mind. Today we got telehealth.
Zoom calls. Right? That's the first thing that comes to mind, right? Zoom calls. That's what we mean by telehealth, right? That's what this means. Did I get that right?
Yeah. Teledoc, that kind of stuff. That's what we're talking about here.
That's what it means. Like to me, I had to notarize something like last year, maybe the year before, and I did one of those things where like the notary was doing that. I took an exam. My French wine scholar exam was one of those, and there was like this lady in Paris. And I did that. So like, I've never done a doctor's consultation that's not true. That's not true. I did one doctor consultation like that, and it was fine. It was convenient. So what comes to mind? Zoom calls.
Yeah. What comes to mind for me is like COVID. Like, oh, terrible time. I remember I went to a couple different doctors through Zoom calls during the whole COVID thing. So that was strange, and I'm glad it's over. But the other thing that comes to mind for me is this Hims and Hers stock. So Hims, you're aware of this one. It keeps popping up on our scans. Looks far better than Teladoc and any of its other competitors in the space, making new highs against its peer group. You see that relative trend against ARC and the lower pain there. This is a nice base. These are those bases we're talking about in these growth stocks that we want to be buying. How they do?
These are nice bases. These are sick bases.
We don't do
Hims and Hers, huh? This is a new one on me. I didn't know about this one.
What's up?
What scan did this come from?
2 to 100, I think, and it might have been UTH also. Oh, and it's an inside scoop. This is a scoop name. Scoop.
It's a scoop name also, so it's popping up on a bunch of them. Interesting. Very, very interesting. All right, 2-minute drill. A lot of relative strength a lot of relative trends are at logical levels for some corrective action. Is the run in growth and mega caps ready to take a breather?
So it's been all about tech all year long, right? You could literally go to like the first of the year and look at this relative trend in XLK SPY, which we're showing here in the lower panel of this chart. It's been like a straight line higher for tech on a relative basis and on absolute terms. But what is this chart showing? Logical levels, right? For some corrective action. You got it on an absolute basis running into those August highs from last year. Key level. And then on relative terms, running into its highs from a few years ago versus the S&P 500. To me, this is a very logical place for some constructive rotation to take place. Let's see value and cyclical stocks pick it back up. They really kicked off this rally late last year. Growth and tech has done their part. For now, I think they can pass the baton off, and it'd be very, very healthy to see the value and the smaller and mid cap stuff kind of pick up the pace here a little bit.
What's that saying about interest rates if technology and growth is the underperformer here, and we get rotation again into energy and industrials? Financials have been very impressive over the last couple of weeks. Regional banks not so much, but at the index level, the XLF, very impressive. What does that say for interest rates if that's what's happening in that environment? I don't necessarily think that's a bearish thing for equities at all. But I'm not seeing any absolute weakness yet in technology. So curious to see if that rolls in or if they just digest this overhead supply in a very clean manner.
Yep. And wouldn't that be the most bullish outcome, right? You don't get the absolute weakness, but you get a little give back on relative terms. Let this trend cool off versus the S&P 500. Financials held where they needed to. Energy stocks held where they needed to. Materials are picking it back up. Let's see those groups start working again, make some progress here.
Yeah, and treasury bonds, when you look at a lot of these metrics are sort of below overhead supply from former support levels, kind of back to those levels. It would make sense for, the interest rate market to kind of continue to churn sideways. Isn't that what would be best for the stock market?
Absolutely. And you're kind of seeing it just these past few days, right? Rates start ticking higher, and then you're seeing that growth trade come off a little bit, especially on relative terms.
All right, hot takes. What do you got this week?
Hot. So we've been talking about the banks like every week on here. I didn't want to, I didn't want you to kill me, so we didn't add it today, but I'm going to talk about them anyway. Charles Schwab just reported earnings, big fan of Schwab. I'm a client. They came out and were very aggressive and communicated their stance to the market back in March when Silicon Valley Bank blew up. And they basically said, hey, guys, we're Schwab. We're going to be just fine. Right. And I really loved that leadership coming from the CEO. Yesterday on their earnings conference call, they announced that they're suspending buybacks. You can't come out and act that way and then suspend your buybacks 2 weeks later. I hate that. Terrible move. Shame on him.
All right. So you're scolding the CEO of Charles Schwab. I'm sure he's very concerned with your opinion. For me, I'm just super stoked for the CMT Symposium next week. This is the annual conference that the CMT Association puts on. It's always a lot of fun. A lot of smart people in that room. A lot of your favorite technicians are all in there, good buddies of ours. It gives us a good opportunity. We don't see each other much, especially these days compared to back in the day. So it is nice to get together. Big party at the New York Stock Exchange Thursday night. I'm stoked. I think Morgan's coming, by the way.
Oh, it's
I
awesome.
think my wife might make an appearance. I'm trying to get her. I'm like, hey, it's at the New York Stock Exchange, open bar. She's like, I don't even drink anymore. Barely drinks. She'll have a couple beers,
Are we going to a Knicks game?
Are we going to a Knicks game? Probably not.
Yeah, I know.
Yeah, probably not. Maybe the Heat play the Knicks in the playoffs a week later, and maybe I'll go, but you'll be back in the Keys by then. So, all right, guys, listen. Thank you, as always, for watching. Make sure to give us a like and hit the subscribe button so that you never miss an update. And follow me at All-Star Charts. Make sure to follow Steve at S. Straza. Leave a comment below. Let us know what you think, and we will see you next week.